Hello, taxpayers! I am Rex,
And I am Carla.
and as students that love taxation, my partner and I will report a topic on business taxation. The subject: Introduction to Value Added Tax. Let's begin. What's the definition of VAT? Value Added Tax or VAT is a consumption tax. It covers all VATable sales of goods, properties, and services of VAT taxpayers. And who are these VAT taxpayers? Us, you, and me. Yes, whether you like it or yes, when you are buying something, you are likely paying VAT. For example, you go to the grocery store to buy a loaf of bread. For the loaf of bread, you paid 112 pesos. Now, you may think you only paid for the loaf of bread. But no, you actually paid 12% more because that loaf is actually subject to VAT. And since VAT is a 12% tax on goods, the selling price of the bread is likely 100 pesos. And the 112 pesos that you paid is the invoice, which is the selling price plus VAT. Thus, as annoying as it may sound, we are all paying VAT even when we are unaware. Because of the lifeblood doctrine, it is our duty to our country and our duty as taxpayers. But now, you may be asking, what defines a VAT taxpayer? As individuals, it may be easier, but in the case of businesses, it is more complicated than that. To understand the types of VAT taxpayers, we must first take a look at the VAT threshold. What is the VAT threshold, you're asking? Now, class, the VAT threshold is a 3 million peso limit. In simple terms, if a taxpayer's annual sales and receipts is below 3 million pesos, they are not subject to VAT. They are subject to 3% percentage tax. However, once that annual sales and receipts exceed 3 million, they will be subject to VAT because they have exceeded the threshold. However, one must be careful in determining the VAT threshold. Here are a few illustrations. Let's say Valencia department store had the following sales for the year. Although it seems that their total sales exceed the VAT threshold, not all of these sales are VAT sales. Some of these sales are exempt sales. Take a look. Note that fertilizers and fruits are not subject to VAT. Why? Because taxing them would be akin to killing the goose that lays the golden egg. These are necessities. So, Valencia department store does not actually exceed the VAT threshold since you do not count the exempt sales in the consideration of the VAT threshold. Second illustration. Navales Corporation has the following subsidiaries and branches. Also, this is their corresponding 12-month sales. Although it seems as if Navales Corporation exceeds the VAT threshold, you must always remember, class, that each corporation is a separate taxable entity. When calculating the annual gross sales and receipts, the only sales that count are the sales of Navales Corporation and its branches. So, Navales Corporation does not exceed the VAT threshold. Now, there are two kinds of VAT taxpayers: VAT registered and VAT registrable persons. Take note, both of these taxpayers pay VAT. However, there's a slight difference. First, VAT registered persons are those registered with the BIR as paying VAT. Because of this, regardless if whether their annual sales and receipts exceed 3 million, they will still pay VAT. Here's an illustration. Rex's business, a VAT registered proprietorship, has annual sales and receipts of 2 million pesos. So, the question is, since they do not exceed the VAT threshold, are they subject to VAT? The answer is yes. Rex's business is subject to VAT since it is VAT registered, even if it is exceeding or below the VAT threshold. Since it is VAT registered, it is subject to VAT regardless. The second kind of VAT taxpayers are those VAT registrable persons. What's the difference? VAT registrable persons are not registered with the BIR. However, their annual sales and receipts already exceed 3 million. Here's an illustration. Let's say Wally Bayola owns a bakery. His bakery is very successful and his annual sales and receipts is 10 million pesos. However, he refuses to register with the BIR. So the question is he subject to VAT? The answer is, of course, since non-registration is not an excuse to non-payment. Regardless if you are registered or not, if you exceed the VAT threshold, you must already pay the VAT. In fact, since Wally Bayola did not register, he is actually liable for more tax. Why? VAT registrable persons do not get the benefit of input tax credit, meaning he has to pay more input tax because he cannot offset the input tax from the output tax. So in the end, more tax. That's why it's important to register if you are registrable already. With this, now you know what makes a VAT taxpayer a VAT taxpayer. But what makes VAT VAT? To explain that, take the stage, Carla.
Thanks, Rex. To be honest, VAT sounds intimidating at first because there are so many terms like output VAT, input VAT, and more. But be not afraid. To make it simple, let's explain the nature of VAT. VAT is a form of consumption tax. It is a tax on the use, purchase, or consumption of goods and services. Usually, it is attached to the selling price of a good. But how do we even compute for VAT, considering regular VAT rates? Here's how. If a good or service's selling price is VAT exclusive, you multiply the selling price by 0.12 or 12%. The product is the VAT. However, if the selling price is VAT inclusive, you multiply the selling price by 12 over 112. The product is still VAT. But you're probably asking yourself, what makes VAT different from other consumption taxes? This is the reason why. VAT is a tax on the value added at every stage of the business. Unlike ordinary sales tax, which is imposed only once at the final sale, VAT is imposed every time value is added to a product as it moves through production or distribution. Sounds confusing, right? I'll give you an example. Let's say Bato de la Rosa has a business. He is in the business of selling wigs. So, his business is called Bato Wigs. To make his wigs, the main ingredient is synthetic fiber. So, he buys 10 kilos of fiber from a supplier. The fiber sells for 50,000 pesos. However, this is merely the selling price. Since the fiber is subject to 12% VAT, its invoice price is actually 56,000 pesos. Since the 12% of 50,000 is 6,000. Hence, Bato pays 56,000 for the fiber needed to make his wigs. But it doesn't stop there. Let's say he has made his wigs and is ready to sell it for 10,000 apiece. When selling it, the invoice price of each wig will be 11,200 pesos, as it is still subject to 12% VAT. This means that, in the end, VAT is ultimately borne by the consumer. Now, you may be wondering why I needed to tell you that story. That is because it demonstrates two concepts, input VAT and output VAT. Input VAT is the VAT paid by a taxpayer from domestic purchases of goods or services. In this case, it was the 6,000 pesos paid by Bato to the supplier. Output VAT, on the other hand, is the VAT received by a business when selling its goods or services. There are two types of output VAT: regular output VAT and zero output VAT. Regular output VAT is a tax on domestic sales or receipts. Hence, it is a 12% VAT rate. On the other hand, zero output VAT is a VAT on exported sales or receipts. Hence, it is a 0% VAT rate. This is because exported goods or services are not consumed in the Philippines. Consequently, it cannot be subject to VAT because VAT is a consumption tax. Nevertheless, in the example I gave, the 1,200 pesos that Bato garnered from every wig sold is an example of a regular output VAT, since it was sold domestically, but don't be misled. This output VAT, although received by the business, is still payable to the government in the end. Yes, for purpose of administrative feasibility, the business is the one collecting the VAT, but during its tax return, it shall remit the same to the government in its VAT payable. In short, it is an indirect tax. Back to you, Rex.
Yes, thank you, Carla. VAT, in its nature, is an indirect tax. Consequently, even if taxpayers collect it, it is still payable to the government in the end. Thus, the VAT due is computed as follows. Take a look. This is the value-added tax model, and the formula is output VAT minus input VAT equals VAT due and payable. When we say VAT due, this is the amount of VAT that must be paid to the government. Yung VAT talaga na babayaran natin sa gobyerno. It is recorded each month and paid quarterly. Now, classmates, baka nag-iisip kayo, why do we subtract the input VAT from the output VAT? The reasoning is simple. To avoid double taxation, businesses must subtract their input VAT from their output VAT since yung input VAT ay yung mga binayad nila sa kanilang supplier. If not, they will pay more. Thus, the government allows businesses to use input tax as a tax credit. However, there is an exemption. As I've said, if you are VAT registrable and has not registered with the BIR as a VAT registered taxpayer, you do not get the benefit of input tax credit anymore. Thus, you have to pay more tax. Ngayon, balik tayo sa VAT due. Buwan-buwan, kino-compute ang VAT due by offsetting the input VAT from the output VAT. Ngayon, if that VAT due becomes positive, then it is VAT payable. However, baka iniisip nyo, if negative, refundable. No. If the VAT due is negative, it is called input VAT carryover. This means that it is carried over to the succeeding month to be credited to the future output VAT. For example, if you're confused, take a look. ABC Company had the following output VAT and input VAT for January. Hence, subtracting the input VAT from the output VAT, this is their VAT due. Since 3,600 is positive, ABC Company must pay it to the BIR since it is VAT payable. However, paano kung baliktad? What if the input VAT was higher than the output VAT? Ito yung sinasabi ko. The VAT due is negative, thus it becomes input VAT carryover. Now, since this is for January, for the month of February, ABC Company will add the excess input VAT on their February input VAT to credit it to that month's output VAT. Sounds confusing? Allow Carla to explain further. Carla?
Yes, what Rex did is an example of VAT reporting. Take a look at this table. You see, VAT is a paid quarterly. A quarter is composed of 3 months. And the deadline of a taxpayer for filing his quarterly value-added tax return is 25 days from the end of the quarter. So what does this mean? If the end of the quarter is March 31, then you must submit until 25 of the April. If the end of the quarter is June 30, then you have until July 25. Simple as that. Now, here's another illustration. Rex, a proprietor, is VAT registered. He had the following purchases and sales, exclusive of VAT. To make the accounting entries for the month of January, we take the purchases and the sales and ascertain the input VAT and output VAT amounts. To get the input VAT, we multiply the VAT exclusive purchases of 700,000 pesos with 12%. Consequently, we get 84,000. Hence, the total cash credited for the month of January is 784,000 pesos. For the output VAT, we multiply the VAT exclusive sales of 650,000 to 12%. Hence, the output VAT is 78,000 pesos, and the total cash debited for January is 728,000 pesos. All that we need now is the VAT due. So, we subtract the input VAT from the output VAT. But since the result is negative, this becomes input VAT carryover and will be added to the input VAT for the month of February. Next illustration. A VAT taxpayer has the following output VAT and input VAT during the month starting January to March. So, here's how it will be reported and computed. The monthly VAT return for the first 2 months of the quarter reports only add output VAT and input VAT for the respective month. However, kung titignan natin yung sa March, kasama na pati yung mga sa prior months, since it is a quarterly reporting, it also covers the output VAT and input VAT from the January up to February. Ganito lang yun guys, tandaan nyo ha. Whatever it is the last month of the quarter, the VAT return becomes cumulative. Meaning, to get the quarterly VAT due, you must include the transactions from the earlier months of that same quarter. So, the March VAT return the earlier months of that same quarter. That March VAT returns includes January, February, and March. Ganun lang. Hindi ko na papasakitin pa ang ulo nyo. Kaya, back to you, Rex.
Okay, Carl. Now, to wrap up our report, these are the sales subject to special VAT rules. Usually, sales are subject to the regular VAT rate of 12%. However, if kasali ang sales mo rito, it is treated differently. First example, exempt sales. Of course, exempt sales are those sales not subject to VAT. Number 1, it can be sales exempted by law, or number 2, sales subject to percentage tax. Of course, not all sales are subject to VAT because it can be subject to a different kind of consumption tax or exempted by law. This is because you can't tax everything, because if you tax everything, it would be akin to killing the goose that lays the golden egg. Second, we have zero-rated sales. Zero-rated sales can be export sales, sales to economic zones, or sales to persons engaged in international transport operations. Basta kaya siya tawag na zero-rated sales is because these sales are subject to zero output VAT. Kasi nga, since they are not consumed in the Philippines, they can be consumed outside the Philippines or consumed by people na mga dumaan lang sa Philippines, it cannot be subject to consumption tax. However, students take note, even if there is no output VAT in these transactions, there is still input VAT. So what happens to the input VAT? Two things. Either the taxpayer can have an input VAT refund, or the taxpayer can have an input VAT tax credit. Here's an illustration. A VAT registered person exported goods for 400,000 pesos. These goods were purchased beforehand for 200,000 pesos before 24,000 input VAT. Since ngayon, there is input VAT involved, but there is no output VAT, the taxpayer may claim a tax refund, or if not, the input VAT will be credited against future output VAT. And third, we have sales to the government, which entails a limited claimable input VAT. Ano ibig sabihin nito? Simple lang. Rather than the usual 12% VAT system, the law requires government agencies and government-owned and controlled corporations to withhold 5% VAT on their purchases. Ang nangyayari, instead of paying the full amount, the government, when buying from businesses or taxpayers, pays less. Yung 5% na yun. This is why the claimable input VAT on sales to the government is fixed at 7% because they no longer pay the full amount. Kung baga, ang reasoning dito is kung sa gobyerno lang naman mapupunta ang VAT, ang ginagawa ng government-owned and controlled corporations and agencies is they no longer pay the full VAT amount. This is in order to promote administrative feasibility. Also, kung iisipin nyo, the reasoning is sound because the government does not tax itself. That's why, instead of paying VAT, the government withholds the final VAT on the transaction. If you're confused, here's an illustration. Let's say Rex Corporation sold office chairs to a government agency worth 112,000 VAT inclusive. However, the government will no longer pay the full amount. Instead, it will withhold 5% of the invoice or 5,000 pesos. So instead of receiving 112,000, Rex Corporation will only receive 107,000. But do not worry, kahit kulang ang bayad ng gobyerno, there is no more VAT due and payable on this transaction. That's why it promotes administrative feasibility as I said. Ngayon naman, let's add a twist. Paano kung sabihin nating sobra ang input VAT ng business sa 7% fixed limited claimable input VAT ng gobyerno? Okay, for example, let's say Rex Corporation sold office chairs again to a government agency worth 448,000 pesos. Inclusive na yun of 48,000 output VAT. Rex Corporation purchased the goods for 336,000 pesos, including 36,000 input VAT. So here, we have the input VAT of 36,000. However, the limited claimable input VAT is fixed at 7% by the government. So to get that, we multiply 400,000 times 7%, which is only 28,000. So it is less than 36,000, meaning there is an excess. What will happen to the excess? That's simple. The excess will be treated as a cost of sale or cost of doing business of Rex Corporation. That is the small price that corporations pay in order to promote administrative feasibility. Alright, partner, I think this is all that I can present for today.
Alright! Thank you, Rex. At mukhang natapos na ang ating report. We hope you learned a lot about the nature of value-added tax. Kaya naman, huling paalala, VAT is a tax that is ultimately borne by us, the taxpayers. Hence, if you don't want it to go to waste, vote the right leaders and choose the right government. Once again, I am Carla Navales and my partner is Rex Valencia. Thanks for watching. Bye!